You can use an IRA, which is deemed to be a qualified account, meaning that it qualifies for the IRS tax code's special benefits, right? Meaning that that money can grow tax deferred, okay? So that's a reason why people would buy real estate inside of a self-directed IRA. In my over 8 years of serving as a financial advisor, I only had about 1% of my clientele that ever actually purchased real estate inside of an IRA. Okay, let's talk about it today. An IRA stands for Individual Retirement Account. And in order for you to purchase real estate inside of an IRA, you're going to need a special kind of IRA, okay? This special kind of IRA is called a self-directed IRA. Now, with a self-directed IRA, that means that you don't have anybody at your brokerage controlling anything. You don't have an advisor on your account. It's completely directed by you, meaning that you choose when to buy and sell all of the investments inside of that account. So if you check that box of having a self-directed IRA, you're going to have a special custodian who services this self-directed IRA. Now, this special custodian is of course going to charge you a fee for maintaining all of your records. It's not their job to give you any recommendations on the holdings that you purchase or sell, but it is important that they are there as your back office and special record keepers. In keeping your records straight, it's very important to note that you and your IRA are going to be known as two separate entities, okay? There's going to be you, the individual investor, and there's going to be you for the benefit of, your name and your account type, okay? So you're gonna be completely separate entities. Now, this next list of information that I give you may actually deter you from wanting to buy real estate inside of your IRA altogether. Buying real estate inside of your self-directed IRA is not for the faint of heart, okay? Why? Because there are a lot of strict guidelines that the IRS imposes in order for you to keep this IRA available to buy real estate, okay? Let's talk about some of those strict guidelines that they say. So firstly, this property cannot be one of your residences. It cannot be your first home, and it cannot be your second home if you plan to purchase this inside of your self-directed IRA. It cannot be a home that you are using for a vacation, and it cannot be used by what they determine as a disqualified person, okay? So a disqualified person is an individual who is closest to you who cannot benefit from the personal use of your home. This includes your spouse, your parents, grandparents, or great-grandparents, your children and their spouses and their children or great-grandchildren. Also, it doesn't allow you to include any service providers or anybody who owns more than 50% of the property. These are all disqualifying persons. So if any of these people want to use the property, this will disqualify your entire self-directed IRA, which would completely cancel out why you would buy real estate inside of this IRA in the beginning, right? The reason why people do this, if you're new to this information, is because you can use an IRA, which is deemed to be a qualified account, meaning that it qualifies for the IRS tax code's special benefits, right? Meaning that that money can grow tax deferred, okay? So that's a reason why people would buy real estate inside of a self-directed IRA. Now, of course, this long list of people are going to disqualify your IRA for use. And if you were planning to do that, then you completely missed the whole idea of buying real estate inside of your IRA anyways, right? So as much as these people cannot use the property, you also cannot purchase the property from any of these people on this disqualifying list. If you're not sure who's a disqualifier, I'm gonna link it below. It's section 472.11. You guys can look at that and make sure that you are checking all of the boxes that you need to make sure that your IRA can stay qualified. Okay, so if you're still here with me, your IRA is still qualified and you still want to move forward with making the purchase, let's talk about actually making the purchase. Now, your IRA is probably going to have a pretty high balance in it because it's really difficult to get a mortgage inside of a self-directed IRA for a property that you're looking to buy. So ideally, you're going to want to have plenty of cash in there to make the purchase for the property. But not only do you need to make the purchase for the property, but all transactions need to take place inside of your IRA, okay? So that means everything going out to service the property needs to be coming from the IRA. Anything that's coming into the property in terms of rents, etc., need to be coming into the IRA directly. So you would actually send them to your custodian. Now, when you are making this purchase, you're going to have to keep, again, that cash that's going to purchase the property, but also all of the cash for all of the servicing as well, actually owning the property. Now, your IRA doesn't pay any taxes. And because it doesn't pay any taxes, you cannot take advantage of depreciation. If you're not new to real estate investing, then you know that depreciation can be one of your best friends, all right? Depreciation is considered a non-cash expense, and it's something that you get to write off on your taxes. But if you invest in your real estate portfolio through your IRA, then you no longer get to take advantage of this depreciation and this non-cash write-off, okay? Because you purchased it inside of an IRA that doesn't pay taxes. So you no longer have that benefit, okay? You also wouldn't be able to write off mortgage interest. Why? Because again, you purchased it inside of your IRA. Your IRA doesn't pay any taxes, so you wouldn't be writing off any mortgage interest that you would be paying if you did actually have a mortgage, or you decided, of course, to purchase outside of your self-directed IRA. You also don't get any of the benefits or tax deductions that come with owning investment property outside of an IRA because, again, you're not paying taxes, so you don't get any of those tax deductions. Additionally, you wouldn't get any of that income either because that income that is paid for that property has to be paid into the IRA, not into your pocket as the owner. But hold on, there is a benefit, okay? Anytime something happens with the property and you need to cover an expense, that money would come from the IRA. It wouldn't actually come out of your own personal pocket, so there is that added benefit. So think about it like this. If your property incurs a lot of very major expenses in a short amount of time, and your IRA doesn't have enough money in it to cover that, where would you get the additional funds for that? Because your IRA actually has a contribution limit of $6,000 or $7,000. I'll link the direct information below, but if you can only put $6,000 or $7,000 into your IRA every year and you incur a major, let's call it $10,000 expense, and you were already low on cash in there, where would you get the money to cover that expense, okay? These are all just what if scenarios, right? If you're ready to commit to this, there's a few things that you should do. First of all is understanding how much cash you have inside after you make this purchase, because you're going to have to cover major expenses, like I said, all of the taxes, anything that may come up. So you may want to sit down with a financial advisor and run just some what if scenarios, right? You're also going to want to sit down with an attorney who's well versed in these kind of property purchases, who can review the documents, right? An HOA or any other documents related to purchasing the home. You want to make sure that you've had an attorney overlook those documents for you to make sure that everything is on par, right? Then you're going to need to get familiar with the custodian's guidelines and rules, because the custodian is the one who's going to be that liaison between you and the IRS and making sure that your IRA stays qualified. And next, it may be good that you speak with a tax advisor who can help you determine exactly how this purchase is going to be made, if you're going to be using an LLC, or how you're going to actually make that purchase. That's going to be really key. And the next thing is you're going to have to be patient. You're going to need to allow 2 to 4 weeks to have this IRA set up and ready to go before you're actually ready to make your purchase. And that time frame really just depends on the custodian that you use and all of the other professionals that are in place, making sure that you make this purchase accurately. Okay, so let's say you've gone through that whole process. You had money in there, you qualified your account, you purchased the property, you sat on the property for 5 years, 10 years, however long, and now you're ready to sell the property. Now, when you sell the property, it's going to be just like any other sale. You and the buyer are going to agree upon a price. And once that is all sorted out and you're ready to sell the property, you're just simply going to sell the property via your entity into the buyer's hand. All of that money will go back into your account, either tax-free or tax-deferred, depending on the makeup of your IRA. One final consideration I have for you is liquidity. How easily can you sell out of this investment when you're ready? With stocks, it's relatively easy. You can typically get your money back like that. With real estate, it is a notoriously illiquid investment, and so it could take much longer for you to actually sell and get your money back with that. So when you do it inside of an IRA, and you also have the hurdles of working with a custodian, it just can be a much longer process. So it's important to understand that you don't have high liquidity when you buy real estate inside of your IRA. Let's wrap up with some pros and cons of purchasing real estate inside of your IRA. Again, this is not for the faint of heart. It's really for real estate investors who consider themselves to really be real estate investors, all right? Because the cons of buying real estate inside of your self-directed IRA are that you have to have a special custodian in order to manage this for you, and that can be kind of pricey. Nobody can benefit from the use of your property, not you and none of your relatives. All of the expenses have to go through the IRA, okay? You cannot pay yourself to do the work. You have to pay somebody else. You can't claim deductions for the property. So bye-bye to most of those tax benefits that you're used to getting. But on the other side, the pros, buying real estate inside of a self-directed IRA can actually give you some diversification. It's a really powerful tool if you are a real estate investor. Real estate has historically grown over a long period of time, so that makes it a really good investment for an IRA since an individual retirement account is set up for your retirement. Real estate can provide a steady income stream, which would be really nice to fund and help grow your IRA. Additionally, the last pro that I'm going to give you guys is that if you are here to accumulate and you flip houses often, doing it inside of your IRA can be helpful for you to be able to avoid some taxes, okay? So of course, you can just move your capital gains tax along, but you can also do that same thing inside of your IRA. So it really depends on your real estate investing strategy as to whether or not a self-directed IRA will work for you. I'm happy that I could share some of the drawbacks to using a self-directed IRA, but also a lot of the pros and how it can be really positive for those of you who are typical real estate investors. Wishing you the best of luck on your investing journey.